Imagine you are standing in a dusty office in Palo Alto in the year 1999. The air is thick with the scent of cheap coffee and the hum of bulky computer monitors. You watch a young, sleep-deprived Elon Musk staring at a whiteboard. On it is a single, bold letter, X. This wasn't about a social media site back then. It was about money, pure and simple. Here is a wild fact to kick things off. In its early days, the company that eventually became PayPal was actually voted one of the worst business ideas of the year. People thought the idea of sending money over the internet was totally insane. You probably think X is just a place for breaking news and spicy takes, but for Musk, this has always been a much bigger play. He wants to build the everything app. Think back to the late 90s. Banks were slow and they were boring. They took days to move money from one place to another. Musk hated that. He envisioned a world where banking, insurance, and investments all lived under one roof. He called it X.com. He wanted it to be the center of the financial universe. But his partners didn't share the vision. They pushed him out of the CEO spot while he was on a plane for his honeymoon. They even ditched the name. They thought PayPal sounded friendlier and safer. For over 2 decades, that single letter remained a ghost. It was a dormant brand waiting for the right moment. Then, in 2022, everything changed. Musk didn't just buy a social media platform for $44 billion. He bought a massive global database of human interaction. When he took the bird logo down and put that old X back up, it wasn't just a rebranding. It was a resurrection of a 25-year-old obsession. The tension here is palpable. Most tech CEOs focus on engagement or ad revenue. Musk is looking at the plumbing of the global economy. He wants to bypass the old-school wire transfers and those annoying hidden fees. He's aiming for a system where money moves as fast as a direct message. It's a direct challenge to the institutions that have ruled the world for centuries. Finance people still go back and forth on whether a Western audience will actually trust a social media app with their life savings. It's a huge gamble. We've seen this model work incredibly well in places like China, with WeChat. People there pay for groceries, rent, and even taxes through one app. But in the US, people are much more protective of their financial data. The 1999 launch of X.com was the first shot in a war that has lasted a quarter of a century. Musk has always been playing the long game. He didn't forget about his dream while he was building rockets or electric cars. He was just waiting for the right infrastructure to be in place. Now, that war is entering its most aggressive phase yet. The goal isn't just to change how we talk or how we share news. It's to change how we pay for everything from a cup of coffee to a new house. But there is a massive problem. You can't just call yourself a bank and start taking deposits. There are thousands of rules and a mountain of red tape standing in the way. To win this fight, Musk needs more than just a famous name and a lot of followers. He needs the legal right to move money in every single corner of the country. And while the world was distracted by headlines, he started collecting those rights one by one. Building a global financial empire isn't just about having great code or a famous face. It's about the boring stuff. We are talking about thousands of pages of legal documents and endless meetings with government officials. You see, in the US, the financial system is a giant, complicated maze. Every state has its own set of rules and its own gatekeepers. If Musk wanted to turn X into a bank, he couldn't just flip a switch. He had to go door to door, state by state, asking for permission. This is the quiet war that most people missed. While the headlines were focused on staff cuts or controversial posts, X was busy collecting money transmitter licenses. These are the golden tickets of the finance world. Without them, you can't legally move a single cent between users. It started slowly. First, there was New Hampshire and Michigan. Then, the momentum picked up. By the middle of 2024, public records showed that X had secured these licenses in a huge chunk of the country. Imagine the sheer amount of red tape involved here. Each application requires a deep dive into the company's books. Regulators look at everything from security protocols to the personal history of the leadership. You might expect a billionaire who likes to break things to struggle with this kind of scrutiny, but the licenses kept coming. Rhode Island gave the green light, then Utah, then Arizona. This wasn't a random collection of permits, it was a strategic land grab. The tension in this phase was invisible to the naked eye, but it was intense. Traditional banks weren't exactly happy to see a tech giant moving into their territory. There was a lot of pushback behind the scenes. Some regulators were worried about how X would handle fraud or money laundering. They were looking at Musk's management style and wondering if it was a good fit for the delicate world of banking. One mistake or one security breach could trigger a massive crackdown. Analysts still argue about whether X can actually maintain the level of compliance needed for a national financial network. It's one thing to run a social media site where people argue about movies. It's a completely different thing to manage billions of dollars in payroll or sensitive wire transfers. The rules for banks are written in blood and past financial crises. They are meant to be rigid. Musk, on the other hand, is the king of moving fast and breaking things. That culture clash is the central conflict of this entire project. You look at the map of the US and see the gaps starting to fill in. It's like a game of Risk. Every new state license brings X closer to a critical mass. Once you have enough of the country covered, you don't need the old banks anymore. You can start offering things like high-yield savings accounts or instant peer-to-peer payments. You realize that this wasn't just about a pay button. It was about creating a shadow system that operates alongside the traditional dollar-based world. Think about the scale of this ambition. If X becomes the primary way people send money to their families or pay for their groceries, the old banking system loses its grip. You find yourself wondering if the big banks even saw this coming. They were so focused on competing with each other that they might have ignored the social media app in the corner. Now, that app has the legal right to handle money in almost every American backyard. The foundation is laid. The licenses are in the safe. Now, the real disruption can finally begin. Imagine a sleek, matte black card with nothing but a single white X in the corner. It has no bank name and no colorful logos. You tap this card against a terminal at a grocery store, and the transaction is instant. This isn't a futuristic movie scene. It is the center of a massive power struggle. To make this work, Musk needed a bridge to the old world. That bridge was built through a major partnership with Visa. This deal changed the game completely. It meant that an X account wasn't just for posting thoughts. It was a legitimate global bank account. Suddenly, the money sitting in a digital wallet could be used to buy a sandwich in London or a train ticket in Tokyo. This was the moment the project moved from a digital experiment to a real-world utility. The old guard in the banking world didn't take this lying down. This move was basically a plastic coup d'etat. For decades, companies like Chase or Wells Fargo have owned the relationship with the customer. They controlled the cards in people's pockets. Now, a social media company was cutting them out of the loop. This created a huge amount of friction. Traditional banks started whispering about security risks. They pointed to the Wild West nature of social media. They argued that a platform known for chaos shouldn't be trusted with the keys to the vault. There was also a lot of internal drama. Launching a credit or debit card is a logistical nightmare. The company had to deal with chargebacks, fraud, and lost cards. X had to build an entire customer support wing from scratch. They weren't just fighting the banks. They were fighting the sheer complexity of the global payment machine. Every time a card was swiped, a dozen different systems had to talk to each other in milliseconds. There's still a real disagreement on whether a tech company can provide the same level of fraud protection as a century-old bank. Some finance experts argue that X is too lean and too fast. They worry that if a hacker gets into a profile, they don't just get private messages, they get the rent money. This fear is a major hurdle for the company to clear. They have to prove that their vault is just as strong as the one at the local branch. This risk is the main reason many people are still hesitant, but the numbers tell a different story. The convenience of having everything in one app is a powerful drug. It feels like the future. Imagine checking notifications and then paying a utility bill with one swipe. No more logging into 5 different banking apps. No more digging for a physical wallet. Life becomes a little bit more seamless. Let's zoom out for a second. Why does this matter so much? Because the credit card companies take a small piece of every single transaction. It's called an interchange fee. When you buy a coffee, the bank takes a few cents. Those cents add up to billions of dollars every year. That is enough cash to build a fleet of spaceships. Musk wants that money. He wants to keep it within his own ecosystem. By using the Visa network to start, he is playing a Trojan horse strategy. He gets his foot in the door using their pipes. Then, once enough people are using X to pay, he can build his own pipes and cut Visa out too. This is why the banking giants are sweating. They see the writing on the wall. They know that if people stop opening their bank apps, the banks lose their power. If you spend all your time on X, it makes sense to keep your money there too. That is the ultimate goal. Total immersion. Let's get real for a minute. This isn't just about a cool card. It is about data. Every time a card is used, X learns more about the person using it. They know what you like to eat and where you like to shop. That information is worth more than the money itself. It allows them to offer targeted loans or special deals. It turns the app into a living, breathing economy. This is the part that really scares the old school bankers. They are losing the data war, and in the modern world, data is the new gold. The story takes a wild turn when the digital world crashes into the halls of government power. For years, people thought X was just an isolated playground. But then, the Department of Government Efficiency happened. Everyone calls it DOGE for short. It sounds like a joke from the internet, but the implications are incredibly serious. Reports at the time showed that Musk was given a massive mandate to look under the hood of the entire federal government. Imagine you are standing in a high-tech control room where every single dollar of federal spending is visible on a giant screen. That is the ultimate data set. The US government moves roughly $6 trillion every year. That is a mind-boggling amount of cash. It is enough to give every person on Earth almost $1,000. But the way the government handles that money is often incredibly outdated. They still rely on slow processes and ancient software. Quick reality check. This isn't just about saving taxpayers a few bucks on paper clips. This is about the plumbing of the global economy. By advising the government on how to be efficient, Musk gained a backstage pass to the world's largest payment engine. You might notice that X started talking a lot more about financial freedom around this time. The goal was to take the efficiency of Silicon Valley and force it into the gears of Washington. The tension reached a breaking point with the Federal Reserve. The Fed is the ultimate gatekeeper of the US dollar. They control the interest rates and the money supply. Suddenly, the man building a rival financial system on X was the same man advising the government on how to spend its money. It was a collision of worlds that made the traditional banking elite very nervous. You start to see why this felt like a direct attack on the status quo. Economists still debate whether having a tech mogul in such a powerful advisory role is a stroke of genius or a massive conflict of interest. There is no middle ground here. One side thinks this is the only way to modernize a bloated system. The other side worries that it gives one person too much control over the lifeblood of the country. This debate isn't just academic. It's about who gets to decide how money moves in the 21st century. You can imagine the conversations happening in the boardrooms of the big banks. They weren't just worried about losing customers anymore. They were worried about losing their seat at the table. If X becomes the interface for government payments or tax returns, the traditional bank becomes a ghost. It becomes a utility that no one actually sees or interacts with. Everything started to feel like one giant integrated machine. The rockets, the cars, the satellites, and the social media app were all being pulled into a single orbit. The code in the machine isn't just software. It is the influence that comes from being indispensable. If you provide the platform where people talk, the network where they pay, and the vision for how the government spends, you aren't just a businessman. You are the architect of a new reality. The sheer scale of this ambition is hard to wrap your head around. It's like watching someone try to rebuild a jet engine while the plane is still in the air. There are so many moving parts and so many things that could go wrong. But the momentum was undeniable. The licenses were in place. The cards were in people's pockets. And now, the highest levels of government were listening to the plan. The stage was set for the final act. You walk past a bank today and notice those heavy marble pillars and thick glass windows. They look like fortresses. For a long time, that was the point. They were built to look permanent and unshakable. But those buildings are starting to feel like relics from a different era. Maybe you still have a dusty checkbook in a drawer somewhere. It feels like a souvenir from a slower time. You're witnessing the slow-motion collapse of a century-old habit. The plan for X is to make those marble buildings completely irrelevant. Musk made it clear to his team in late 2024 that he wants the platform to handle a person's entire financial life. He isn't talking about just sending $5 to a friend. He means everything. Securities, high-yield savings, and even mortgages. If you don't need a bank to hold your money or give you a loan, why would you ever visit one again? This is the unbanking of the world. This isn't just a threat to the local branch down the street. It is a challenge to the supremacy of the US dollar itself. If the world starts trading and saving inside a private app, the government's power to track and tax that money starts to slip. This created an incredible amount of friction with global leaders. There was a lot of talk about financial sovereignty and economic security. Every time a new feature launched on X, a new regulation seemed to pop up in response. It was a high-stakes game of cat and mouse played out on a global stage. The tension is high because the stakes are literally everything. If a private company controls the flow of money for hundreds of millions of people, they have more power than most countries. We are talking about a shift in the global order that hasn't been seen since the end of the Second World War. It's enough to make you wonder if the dollar itself is at risk of being replaced by something much more digital and much more volatile. Finance people still go back and forth on whether the global economy can survive without the oversight of traditional central banks. It's a terrifying thought for some. They worry about what happens if there is a crash or a massive technical failure. Without a government-backed lender of last resort, a digital bank run could be catastrophic. But the younger generation doesn't seem to care as much about those old safety nets. They value speed and ease of use over old-fashioned stability. You realize the goal isn't just to be a bank. It's to be the interface for human existence. If X can successfully manage your money, your news, and your government interactions, it becomes the most powerful tool ever created. The traditional banks are left holding the bag. They are stuck with the expensive real estate and the aging customers. Meanwhile, the future is moving into the cloud. The final hurdle is trust. It's the one thing you can't buy with $44 billion. People have to believe that their digital wallet is safer than a vault made of steel. That is the mountain Musk still has to climb. Every successful transaction and every year without a major hack brings him closer to the peak. If he makes it, the banking system we grew up with will finally be a memory. The world of finance is moving faster than most of us can keep up with. It feels like every morning there is a new update or a new policy that changes the way we think about our own wallets. It is a lot to process. We are living through a period of change that people will be studying in history books 50 years from now. The pillars of the old world are shaking, and something entirely new is being built right in front of our eyes. It is both an exciting and a slightly unnerving time to be watching the markets. I'm curious to hear where you are watching this from today. Are you seeing these changes happening in your own city? How is the local economic situation looking in your corner of the world? Do you have any big plans for your own finances as we move into this digital-first future? Drop a comment below and let's get a conversation going. It's always fascinating to see how these global shifts are actually affecting people on the ground. If you found this deep dive into the future of X and the banking world helpful, please consider hitting that like button. It really helps the channel grow and lets me know which stories you want to hear more about. And if you haven't already, make sure to subscribe and turn on notifications. We have a lot more stories like this coming your way very soon. We'll be looking at the tech, the money, and the people who are trying to rewrite the rules of the game. Thanks for hanging out with me today. I'll see you in the next one.